Most buyers in the Durham region right now think they finally have all the power. Prices are down, inventory is rising, headlines are negative. So buyers are going in with low offers, taking their time, and assuming they can always come back to a house next week. And that's exactly how people are losing the homes that they actually wanted. Because while the spreadsheets say we are firmly in a buyer's market, what we're actually seeing on the street is something very different. We are seeing a massive disconnect between the data, which looks cold, and what's happening on the ground, which is heating up pretty fast. If you're relying only on average price stats or rising inventory numbers to make your decision, you're looking in the rearview mirror while traffic is speeding up right in front of you. Today, I'm going to show you why the average price is lying to you and why waiting for the bottom might actually mean you've already missed it. I'm breaking down the Durham Region real estate numbers for January 2026. I'll look at the hard stats, including some very surprising inventory and sales ratios, but we're also going to talk about the invisible shift happening right now that the data hasn't caught up to yet. And by the way, if you're new here, I'm Vilija Truelove. I've been helping families buy and sell homes right here in the Durham region for over 20 years. My job isn't to repeat the headlines, it's to explain what buyers and sellers are actually doing right now so that you don't make a very expensive mistake. All my contact information is right in the description below if you'd like help with your move. So we have some conflicting numbers to make sense of today. Stats that suggest that the market should be slow, yet we're seeing multiple offers again. So let's start with the uncomfortable numbers. In January 2026, the average selling price across the Durham region was $818,694. In December, we were at $844,473. So we saw a clear month-over-month drop. And if we go back to January 2025, the average price was $896,611. So yes, prices are definitely down year over year. But here's where things start to get strange. January is usually when the market wakes up after the holidays. Instead, we actually had fewer sales in January, 412, than in December, 455. That's highly unusual. And even now into February, sales are trailing last year, around 224 reported so far compared to 362 at this point in 2025. So prices are down and sales volume's down. That sounds like a cooling market, right? Here's the other half of the story. Inventory. We currently have 1,499 active listings in the Durham region, and 1,084 new listings hit the market in January alone. This feeds into a stat called the sales to new listings ratio. Basically, out of all the homes that list, how many actually sell? In December, that ratio was 86%. Almost everything listed was selling. In January, it dropped to 38%. Technically, anything under 40% is considered a buyer's market. And this is not just a normal winter slowdown. Last January, we were about 40%. The ratio is similar, but the behavior in the market is completely different. Months of inventory rose from 3.1 to 3.6 months, and days on market climbed to 39. So on paper, we have prices down, sales down, inventory up, a buyer's market ratio. It looks like buyers have all the leverage. So why are my clients facing bidding wars? Why are some homes selling in 4 days? Because right now, Durham doesn't really have just one housing market. It has two completely different markets happening at the same time. Market one, the stale market. These are overpriced homes, sellers that are still anchored to 2025 pricing. They list high, refuse to adjust, and they sit. They inflate inventory and push up the days on the market. Market number two is the fresh market. Well-priced homes, prepared properly, and aligned with today's financing realities. These are the ones attracting immediate showings and offers. That 38% ratio, it's not telling you that demand disappeared, it's telling you that buyers have become selective. In just the last 2 weeks, across Pickering, Ajax, Whitby, Oshawa, and Clarington, there were about 148 freehold sales. Around 53 sold over asking, more than 1/3. And some weren't a small amount. One sold $171,000 over asking. Now, don't panic. Over asking doesn't automatically mean overpriced. Some are only a few $100s over. We're even seeing multiple offers that still sell under the list price. What this actually tells us is that buyers are not reacting to the market statistics. They're reacting to the specific house. They've been waiting, watching rates, watching prices, When a good house appears at a fair price, they move immediately. Which brings us to the most important tool right now, the comparative market analysis, or the CMA. Because the split market makes list price almost meaningless. You cannot trust the list price to tell you the value. A house listed at $800,000 might actually be worth $750,000, or it might be strategically listed and worth $850,000. We have to analyze homes sold in the last 30 days, not 6 months ago. In this market, 6-month-old comparables are basically historical artifacts. Now, let's look at your specific towns because real estate is hyperlocal. January 2026 average prices, Pickering around $935,000, Whitby about $920,000, Ajax around $880,000, Clarington approximately $728,000, and Oshawa around $709,000. All areas declined year over year, but not at the rate or for the same reason. Clarington saw the biggest drop at about $123,000. Whitby followed at roughly $105,000. Oshawa dropped around $70,000. Pickering barely moved, only dropping around $14,000. Here's the important part. Durham didn't have one correction. It actually had 2 different corrections happening at the same time. First, the affordability correction. Areas like Clarington and parts of Oshawa saw huge growth during the pandemic because buyers were stretching to get into the market while working remotely. Those buyers were at the most payment sensitive. When interest rates rose, many simply couldn't qualify anymore, so prices corrected the most there. Whitby is different. Whitby didn't fall because demand disappeared. Whitby fell because the move-up buyer got squeezed. Whitby has a much higher concentration of detached homes. The typical buyer there is someone selling a townhouse or semi and moving up. When rates increased, the payment gap between selling and buying became too large, so fewer families could make that jump. So the average price dropped, not because Whitby became less desirable, but because fewer move-up buyers could complete the transaction. Pickering, being closest to Toronto and supported by higher income buyers, stayed the most stable. Ajax also didn't see too much of a drop. And this creates something interesting right now. If you're an upsizer moving from a townhouse in Oshawa, for example, to a detached in Whitby, this is actually an opportunity. The price gap between entry level and move-up homes has compressed. Now, what does this all mean for you in 2026? If you're a seller, you need to be realistic. The 38% sales ratio is a warning shot. The market is not forgiving to overpriced listings. Right now, pricing slightly under market value isn't risky. Overpricing it is. The first 10 days on the market will determine your entire outcome. If you miss that window, you're no longer a new listing. You become inventory. Your competition isn't last year's sales, it's the 1,499 homes that are currently for sale. If you're a buyer, don't get complacent. The good inventory is not sitting around for 3.6 months. Sometimes it's sitting for 3.6 days. If you see a house you truly like, you may not get a week to think. Another buyer has probably been waiting months for that exact home. So get pre-approved, know your numbers, and be ready to act. The biggest mistake I'm seeing right now isn't necessarily overpaying, it's buyers waiting for a market that has already quietly started changing. If you want help understanding the value of a specific property or what's happening in your neighborhood, you can book directly onto my calendar. The link is in the description below, or just text or email me. I'd love to help you make a smart decision. Thanks so much for watching, and I'll see you in the next video.